Good morning, everyone. Welcome to the June 18th, Thursday edition of Market Opening Bell, your 10-minute guide to the stock market. The Hang Seng Index opened slightly higher by 1 point, but then reversed into negative territory. In the afternoon, the decline accelerated, with the index falling as much as 239 points to a low of 24,254 points. It eventually closed at 24,312 points, down 181 points or 0.7%. Total market turnover reached 270.4 billion Hong Kong dollars. The Hang Seng Tech Index closed at 4,669 points, up 10 points or 0.2%. The X-Share Index closed at 8,144 points, down 96 points or 1.2%. Southbound funds recorded a net outflow of 3.222 billion Hong Kong dollars from Hong Kong stocks. Among them, net buying included King Board Laminates at $3.875 billion, King Board Group at $1.822 billion, Zhipu at 839 million, and SMIC at 375 million. Net selling included Alibaba at 2.085 billion, Sino at 1.489 billion, and Tencent at 1.445 billion. According to statistics, Southbound funds have net bought King Board Laminates for 8 consecutive days, totaling 9.653 billion. Net bought SMIC for 5 consecutive days, totaling 1.413 billion, and net bought King Board Group for 3 consecutive days, totaling 3.757 billion, and net bought Zhipu for 3 consecutive days, totaling 3.957 billion. Southbound funds have net sold Alibaba for 7 consecutive days, totaling 10.465 billion. Net sold Sino for 3 consecutive days, totaling 2.72 billion, and net sold Tencent for 3 consecutive days, totaling 3.571 billion. Technically, the Hang Seng Index is temporarily holding above the 24,200 point level for now, but the position remains fragile and unstable. There is still a strong likelihood of another downside test of support at the 24,000 point mark. If that level is breached, the next support would be seen around 23,800 points. The 3 major A-share indexes opened lower by 0.4% to 1%, then traded in a narrow range before rising in the afternoon. They closed the day up between 0.4% and 1.6%. The Shanghai Composite Index climbed back above the 4,100 point level, rising 16 points or 0.4% to close at 4,108 points. The Shenzhen Component Index rose 205 points or 1.3% to close at 15,880 points. The Chinex Index gained 64 points or 1.6% to close at 4,167 points. Combined turnover in Shanghai and Shenzhen reached 3.09 trillion yuan. The renminbi central parity rate against the US dollar stood at 6.8096, up 12 pips from the previous day. China's Securities Regulatory Commission Chairman Wu Qing delivered a heavyweight speech at the Lujiazui Forum, which is expected to have a profound impact on the Hong Kong stock market, described as short-term diversion pain, but medium to long-term deepening of arbitrage opportunities and institutional benefits. Wu Qing's keynote address focused on high-quality reform of the capital markets, the 3 core policy directions: supporting eligible Hong Kong-listed companies to list domestically, issuing A-shares or CDRs, expanding the 5th set of listing standards on the STAR market to include AI large model companies, and cracking down on AI hype concept chasing and cross-border violations will reshape the valuation ecosystem for Hong Kong-listed tech and blue-chip sectors. For high-quality Hong Kong stocks currently trading at valuation troughs, especially large red chip companies and new economy leaders, the ability to list domestically represents a major positive. Through secondary A-share listings A+H, these companies can directly tap into the high premium mainland capital pool, boost overall valuations and leverage the high liquidity of the A-share market for refinancing and mergers and acquisitions. However, since A-share valuations are typically higher than those in Hong Kong, a large-scale return of quality Hong Kong-listed firms could divert some of the southbound funds or cross-border long-term capital originally allocated to Hong Kong stocks in the short term. The STAR market will extend its fifth set of listing standards, which allow unprofitable companies to list to the AI large model sector. At the same time, the CSRC will strictly investigate and punish behaviors such as hyping concepts under the guise of technology, market manipulation, and illegal stock recommendations using AI. In Hong Kong, those second-tier AI software stocks lacking core large model technology and relying purely on overseas API concept hype will face joint strict scrutiny through cross-border regulatory cooperation between the two markets, potentially accelerating the burst of valuation bubbles. In addition, the relaxation of AI listing thresholds on the STAR market will also compete for some mainland unicorn resources originally planning to list in Hong Kong. Kingport Group conducted a placement of Kingport Laminates at an 11.5% discount. Kingport Laminates traded volatile in the morning, falling as much as 5.7% before rebounding sharply, rising 6.9% to a high of $91.8 and hitting a new high. It closed up 3.1% for the day. Kingport Group also reversed from an initial decline and rose 17.7% for the full day. After the transaction, Kingport Group's stake decreased from 66.62% to 61.7%, but it remains the controlling shareholder. Kingport Group successfully cashed out 11.78 billion Hong Kong dollars. This $11.7 billion in cash has significantly optimized its balance sheet, reduced its net gearing ratio, and even sparked market expectations for potential special dividends in the future. While Kingport Group's large discounted placement of its stake in Kingport Laminates at high levels can be seen as major shareholders cashing out and reducing holdings at the peak, or as a signal that management believes current board prices and stock valuations have fully or even excessively reflected market positives, thus locking in profits through this capital raise. It can also be interpreted as a sophisticated capital operation and industrial strategic transformation. Kingport Group has clearly stated that the funds will be used to develop its printed circuit board PCB business, particularly high-density interconnect, HDI, and multi-layer boards. Kingport Laminates copper-clad laminate (CCL) is the upstream raw material for PCBs. The parent company is converting subsidiary equity into cash to directly invest in downstream PCB core capacity, which offers higher gross margins and more direct exposure to AI server demand. This is essentially betting on a larger AI hardware dividend. Kuaishou bucked the market trend and rose 7.3%. According to reports, Kuaishou is in talks with General Atlantic, hoping that the group will lead the first round financing of its Kling AI subsidiary, aiming to secure support from a major U.S. investor before its IPO. Kling AI plans to raise over $2 billion at the post-money valuation of $18 billion. If the agreement is finalized, this would mark a rare investment by General Atlantic in China's highly competitive generative AI sector. The U.S. private equity firm was an early backer of ByteDance and is known for its early investments in Meta platforms and Uber technologies. Apple concept stocks performed strongly against the market on rumors that Apple plans to launch a series of new products by the end of next year, including AirPods equipped with cameras and the second-generation iPhone foldable. Sunny Optical rose 6.6%. ASMPT gained 8%, AAC Technologies increased 2.2%, and Lens Technology climbed 1.7%. Automotive stocks saw significant declines, with Li Auto falling 3.8% to become the worst performing blue chip stock of the day. May social retail sales data showed that automobile sales have been in a slump for 8 consecutive months, indicating that the stimulus effect of the government's trade-in policy is accelerating its marginal diminishing returns. NIO founder, chairman and CEO Li Bin recently stated that the auto industry has entered the most brutal final stage of competition, with this year's market environment being extremely challenging, especially in the domestic retail market. The entire industry should prepare psychologically for a 15% to 20% year-on-year decline in domestic retail volume for the third full year. With national passenger vehicle ownership reaching 370 million units and many households already owning more than one car, the auto industry is believed to have entered a saturated era. The Federal Reserve maintained its monetary policy unchanged, marking the fourth consecutive pause on rate hikes, and removed the so-called accommodative bias from its statement. At the same time, it raised its interest rate projections through 2028, along with inflation forecasts for 2026 and 2027. The latest summary of economic projections showed that the median federal funds rate at the end of 2026 stands at 3.8%, higher than the 3.4% projected in March. Among the 18 officials, 9 anticipate a rate hike of 0.25 percentage points. Projections for 2027 and 2028 were also lifted to 3.6% and 3.4% respectively, up from 3.1% previously for both years. For 2026 overall and core personal consumption expenditures, PCE inflation forecasts were raised from 2.7% in March to 3.6% and 3.3%. For 2027 overall and core inflation projections were increased from 2.2% to 2.3% and 2.5%. The unemployment rate forecast for this year was lowered to 4.3% from the previous 4.4%, though it remains at 4.3% for 2027. Markets interpreted the Federal Reserve tone under Wash's first appearance as shifting toward a more hawkish stance. U.S. Treasury yields rose, with the 2-year yield climbing about 16 basis points to 4.23% and the 10-year yield increasing 5 basis points to 4.5%. U.S. stocks pulled back from record highs. The Dow Jones Industrial Average fell 1% to 51,492 points, ending a 2-day streak of closing record highs. The Nasdaq dropped 1.3% to 26,021 points, while the S&P 500 declined 1.2% to 7,420 points. The fear gauge VIX index rose 2.03 points or 12.4% to 18.44 points. The Nasdaq Golden Dragon China Index, which tracks Chinese stocks, fell 70 points or 1.1% to close at 6,122 points. All sector indexes moved lower, led by declines in communication services. On individual stocks, SpaceX shares rose initially before retreating, gaining nearly 6% intraday, but closing down 5%. Meta fell 5.4%, while Amazon and Microsoft each dropped more than 3%. Salesforce declined 4.1%, making it the worst performer among Dow components. Caterpillar surged 1.1% to lead the Dow, with Goldman Sachs and JP Morgan Chase both advancing around 0.7%. Intel jumped 3.5%, Micron rose 2.2%, and AMD gained 1%. Moderna plans to invest in a German production base and has expressed interest in BioNTech's proposed plant closures. Moderna shares rose about 12%, making it the top performer in the S&P 500, while BioNTech shares advanced around 2.9%. Carvana shares plummeted more than 10%, becoming the worst performer in the S&P 500 after rival CarMax reported a year-over-year decline in first quarter earnings, with same-store used vehicle sales turning negative. Management also highlighted greater near-term pressure on gross margins. CarMax shares fell about 9%. U.S. retail sales for May rose 0.9% month-over-month, exceeding market expectations of 0.6% and surpassing the upwardly revised 0.4% gain in April. Although higher goods and energy prices drove the sales increase, overall consumer real spending growth after inflation adjustment remained supported. U.S. business inventories in April rose 0.5% in line with expectations and slower than the 1% increase in the prior months. Retail inventories climbed 0.7%, matching the initial reading. Wholesale inventories rose 0.6% and factory inventories increased 0.3%. Pending home sales in the U.S. for May rose 3.8% month-over-month, beating expectations of 0.9% and higher than the 0.3% gain in April. Buyers rushed into the market in late spring even without changes in mortgage rates, reflecting persistent housing demand. Consumers appear to have accepted mortgage rates above 6% as the new normal, with more supply needed to moderate price increases. Our stock pick today is Sunny Optical Technology, stock code 2382. Sunny Optical Technology is comprehensively shifting its business focus from the old momentum of traditional smartphone lenses to three major new cultivated growth curves built around automotive optics, AI spatial computing, and optical communications. In the first growth curve of automotive optics, the group leverages its full-stack R&D platform and partner ecosystem to develop a range of other automotive optical solutions, including LiDAR solutions, in-cabin projection display solutions, and intelligent vehicle lighting solutions. In 2025, relying on its high-precision transceiver integrated AA technology and ultra-small size transmitter chip matrix onboard chip packaging technology, the group achieved mass production of a long-range LiDAR transceiver integrated module for a leading automaker. In addition, the group collaborated with the top intelligent driving company to tackle the industry's first LiDAR plus vision integrated project, successfully breaking through high-precision prism assembly and fixation technology for the transceiver module's optical engine. This significantly enhanced detection accuracy and brought brand new technical solutions to the intelligent driving field. In January this year, the group announced the spin-off of its vehicle-related optical business for independent listing, aiming to optimize management efficiency, directly introduce strategic investors, and accelerate global expansion. In the second growth curve of XR and spatial computing, as leading customers successively released new products, the smart glasses market is experiencing rapid volume growth and entering a new stage of scaled development. The group maintains deep strategic cooperation with globally renowned top-tier clients, and shipments of its smart glasses camera modules achieved high speed growth in 2025 compared with the previous year, solidifying its industry-leading position. At the same time, leveraging its industry-leading process technology and supply chain integration capabilities, the group successfully achieved mass production of large wide-angle polarizing beam splitter lens assemblies and developed enhanced reality AR lens products equipped with photochromic solutions. Furthermore, based on its vertical integration capabilities and miniaturized packaging process advantages. The group further optimized the optical performance and structural design of its AR optical engine products, achieving mass production breakthroughs in smaller, lighter designs with superior color performance, continuing to lead the popularization of AR devices toward consumer-grade applications. In recent years, the group completed a strategic share swap with Optical for approximately 1.903 billion yuan, becoming its second largest shareholder. This move will deeply integrate the group's wafer-level micro-nano optics and meta-service device technologies with Gertech's full-chain mass production capabilities, consolidating its leading global position in AI/AR glasses contract manufacturing and core modules. In the third growth curve of optical communication CPO and robot vision, the group has successfully migrated the nano-level precision manufacturing technology accumulated from smartphone lenses to computing power infrastructure, focusing on high-precision optical components in silicon photonics modules. It has resolved the core pain point of optical path alignment and coupling, and now possesses mass production capabilities for micro lens arrays (MLA) and micro prisms. In the area of robot vision (pan-IoT), the group has fully pivoted its instrumentation business toward microscopic vision intelligent agents. Its robot vision modules have achieved explosive growth in lawnmower robots, warehouse logistics robots, and food robot systems, guiding IoT revenue to grow by no less than 60% year-on-year in 2026. Suggested buying price $77.5, target price $86, stop loss at $73.5. I do not hold the above stock.